Look, if you're in the gym business, you know that having a great concept and the best trainers, well, it isn't always enough.
Hmm,
Even the most promising fitness ideas can just hit a wall without the capital to scale or invest or sometimes even just get off the ground.
that's absolutely the reality. A brilliant idea, it still needs fuel, especially in a space as competitive as fitness.
And that's exactly what we're diving into today. We've got this really insightful white paper here from jthomas, and it zeroes in on a very practical funding avenue for gym owners, really at all stages.
Yeah, whether you're just sketching things out or you're maybe looking to expand.
Exactly. We're talking about term loans.
Term loans, yeah. They can be a particularly smart move for folks in the fitness sector. Often it's a more, let's say, direct route to getting the funds you need.
So our goal today, it's pretty straightforward. We want to break down what term loans are all about, specifically for opening or growing a gym. By the end of this, you should have a really clear picture of how they work and maybe if they could be the key for you to unlock your business goals.
Sounds good.
All right, let's unpack this then. What exactly is a term loan and why does Jim Thomas see it as such a strong option for gym owners?
Okay, so simply put, a term loan is where you borrow a specific amount of money, that's the principal, and you agree to pay it back over a set period,
Right.
with regular payments that also include, the cost of borrowing, the interest. What makes them appealing for gym owners, according to this paper, is often the speed, how fast you can potentially get the funds.
Ah, okay.
Also, the flexibility in repayment and the fact that the requirements, the qualification barriers can be, well, more attainable than some other methods.
Right, and the specific term loan program that's highlighted in the white paper, it has some pretty defined features. Let's maybe walk through the main points. We're looking at loan amounts from $50,000 up to $500,000.
Yeah, that's quite a range.
It is.
That kind of range can really cover the spectrum, right? From those like initial startup costs to maybe more significant investments in growth.
And the repayment periods are either 5 years or 7 years, which, gives you some room to tailor your payments to what your business can actually handle.
That flexibility is key.
Now, here's something I found interesting. The paper mentions getting funds in as little as 7 to 10 business days.
Yeah, that's fast. In the business world, and especially when you're trying to jump on an opportunity, that kind of speed can be a real advantage.
How so?
Well, imagine being able to quickly secure a great location before someone else snags it.
Yeah.
Or maybe take advantage of a limited time offer on essential equipment. That speed matters.
Absolutely. And it starts with same-day pre-qualification. That has to save a lot of time and, frankly, energy.
hmm Get to answer quickly.
Okay, so in terms of what you need to qualify, the minimum credit score is 680.
Yep, 680.
And there's an income requirement, $50,000 or more in adjusted gross income. That's your AGI.
Right, on your personal tax returns.
On your personal tax returns, plus a debt-to-income ratio under 40%.
Meaning your monthly debt payments aren't more than 40% of your gross monthly income.
Got it.
Those are like the key figures for listeners to keep in mind. They give a good sense of the financial standing you'd typically need for this type of loan.
So when you look at the whole picture, it seems like this kind of term loan could really be a practical way to get those initial funds for a new gym, or maybe fuel an expansion, or even make a strategic acquisition.
Exactly. It can fill a real need for many gym owners who might not have, say, the extensive assets needed for more traditional bank loans, or maybe aren't looking to give up ownership equity by seeking venture capital.
Okay, so we have a good handle on what a term loan is. Now let's dig into why Jim Thomas specifically calls them out as, ideal for gym businesses. The white paper outlines 4 main benefits. The first one is speed opportunity. Can you maybe elaborate on what kinds of opportunities that speed unlocks?
Sure. What's particularly insightful here is how Jim Thomas connects that quick access to funds directly to being able to seize, those fleeting opportunities in the gym market.
Like what, for instance?
Well, think about negotiating a lease on a prime piece of real estate. The ability to put down a deposit and secure that location quickly, that can be absolutely crucial.
Right, before someone else gets it.
Exactly. Or say you hear about a competitor selling off high-quality equipment at a steep discount.
Mm-hmm.
Having capital readily available means you can jump on that before anyone else. Even securing really sought-after instructors or trainers often requires pretty quick decisions.
That makes perfect sense. Being able to act fast, yeah, that can be a real competitive edge. Okay, the second advantage listed is flexible repayment, cash flow confidence. How does having those choices in repayment terms actually help a gym owner manage their finances day to day?
Well, when you think about running a business, especially a gym,
Mm-hmm.
you might have seasonal ups and downs or maybe a ramp-up period for new memberships, right?
Yeah.
Managing cash flow is just critical. So the option between a 5-year and a 7-year repayment period, that lets gym owners tailor their monthly payments to their expected income.
Okay.
So a newer gym, for example, might opt for longer 7-year term to have smaller initial payments, more financial breathing room while they build their member base.
Makes sense.
But a more established gym, maybe with a more predictable revenue stream, they might prefer the shorter 5-year term to pay off the loan faster and, reduce the total interest they pay over time.
That flexibility really seems key then to navigating the financial realities of running a gym, no matter what stage you're actually in.
Definitely.
All right, the third point is moderate requirements, accessibility. Why are these requirements considered moderate compared to, say, other funding options a gym owner might look into?
That's a really important point about the broader lending landscape. Options like SBA loans, Small Business Administration loans, well, they often offer very attractive terms. They can involve a much more detailed, sometimes lengthy application process.
Right, I've heard that.
And they might require more significant collateral, assets you pledge as security. Similarly, seeking investment capital. That usually involves creating really extensive business plans, potentially giving up a slice of ownership in your business.
Yeah, equity.
Equity, exactly. And often requires a longer track record of success.
Yeah.
So the credit score of 680, the AGI over $50, and the DTI under 40% for these term loans. Well, they can represent a more achievable set of criteria for many independent gym owners or smaller studio operators.
That accessibility could really be a game changer, just like the white paper highlights, for those independent players in the fitness space.
It really could.
Okay, finally, a fourth advantage mentioned is the versatile use of funds. It sounds like this loan can be used for a pretty wide range of needs within a gym business.
Absolutely. Jim Thomas provides a pretty comprehensive list here, which really underscores the adaptability of this funding. You can use it for those essential initial steps, like securing and renovating your physical location.
The build out, yeah.
The build-out, investing in crucial fitness equipment and flooring, getting the word out through targeted marketing campaigns. But it also covers ongoing needs like covering payroll and staffing costs.
Which is huge.
Huge. Or upgrading, expanding your existing facilities as you grow. And even, interestingly, taking advantage of opportunities to acquire underperforming gyms and, revitalize them.
Wow, it really covers the entire life cycle, doesn't it? From startup to growth and even strategic acquisitions. Okay, so we understand the benefits. Now, let's get down to the specifics of qualifying. The white paper gives a really clear checklist. Let's maybe go through those requirements one by one. First up, credit score.
Yep, minimum 680. And it's worth noting, lenders will typically look at your scores from all 3 major credit bureaus: Experian, Equifax, TransUnion.
Okay, all 3. Next is the adjusted gross income, AGI. What's that threshold again?
The requirement is an AGI of $50,000 or more on your most recent personal tax return. This just helps demonstrate a level of personal financial stability.
Gotcha. And the debt to income ratio, DTI.
That needs to be below 40%. As we mentioned, this just looks at your monthly debt obligations compared to your gross monthly income. Gives lenders an idea of your capacity to take on more debt.
Makes sense. What kind of paperwork can someone looking into this expect to provide?
Typically, you'll need your personal tax return for income verification. You'll need to authorize a credit check. And there might be requests for other documents just to further validate your income. Nothing too out of the ordinary usually.
Okay. And just to circle back to that speed we talked about earlier, the pre-qualification process is listed as taking about 1 day.
Around 1 day, yeah. With the potential for funds to actually be available within 7 to 10 business days after you're approved.
Wow.
So that quick turnaround, it really remains a significant benefit, allows you to act swiftly once you meet the criteria.
Now, there's a really helpful tip mentioned here. If you don't currently meet these qualifications on your own, you might want to consider bringing in a cosigner, someone with stronger credit, higher income.
That's a really smart strategy for those who might be just, slightly below the qualification thresholds. A cosigner essentially agrees to share responsibility for the loan.
Right.
And their stronger financial profile can definitely increase the chances of approval.
Good tip. Okay, so we've covered the what and the how of these term loans. Now let's look at some real-world scenarios. The white paper presents 3 key use cases for this type of funding. The first is for new gym startups. How can a term loan be a game changer for someone just launching their business?
Well, for a brand new gym, the initial capital needed,
Yeah.
it can be pretty substantial, right?
Oh, yeah.
So, as Jim Thomas points out, a term loan can provide those necessary funds to first secure a suitable location and then do any necessary renovations or build out. That can be a huge upfront cost.
Huge.
It also lets you purchase all the essential equipment, cardio, weights, maybe even the software you need to manage memberships and track progress.
Right, the management software.
Plus, you can invest in a strong, grand opening marketing push. Got to get those crucial first members in the door and cover those early operational costs like payroll and utilities before the revenue really starts flowing consistently.
It really sounds like it can provide that critical foundation for a successful launch. Okay, the second use case. Expanding to a second or even third location. What are the advantages here for a gym that's already up and running?
So for a gym that already has a proven business model, a solid track record, a term loan can be a really powerful tool for strategic growth.
How so?
You can leverage your existing success to open new facilities in promising markets, broaden your brand's reach, and ultimately serve a larger member base. It lets you scale your operation without necessarily having to, like we said, dilute your ownership by bringing in equity partners.
Right, keep control. And the final use case mentioned is for gym acquisitions and turnarounds. This sounds particularly interesting. How can a term loan actually facilitate that kind of move?
Yeah, this is interesting. In the fitness industry, there are often opportunities to acquire existing gyms that might be, say, underperforming, but have good bones, underlying potential.
Sure, location or whatever.
Yeah, exactly. So a term loan can provide the capital needed to actually purchase the business and its key assets. But the funding doesn't have to stop there. It can also be used to rebrand, remodel the space to attract a new clientele.
Freshen it up.
Freshen it up, exactly. And launch targeted marketing campaigns focused on both keeping existing members and attracting new ones, basically injecting new life into a potentially struggling business.
It's like a financial toolkit for revitalization and growth through acquisition. Very cool. Now, what if someone is listening right now and thinking, okay, this sounds promising, but I'm not sure if I meet all those qualifications right now. The white paper offers some really practical advice for that exact situation.
That's a very important point, yeah, because not everyone will meet the criteria immediately. The first suggestion, as we touched on earlier, is consider a cosigner, someone with a stronger financial profile who can provide that added layer of security for the lender.
Makes sense. Another recommendation is to look into credit coaching. What does that involve, typically?
Well, your credit score is a pretty significant factor in loan approval. So if yours isn't quite at that 680 mark, seeking professional guidance from a credit repair service or a coach, it can be a really worthwhile investment. They can help you understand what's impacting your score and develop actual strategies to improve it over time.
Okay, practical steps. And the third piece of advice is to focus on generating a short-term boost in your revenue. What are some concrete ways a potential borrower could maybe demonstrate that?
This could involve, say, taking on additional part-time work, maybe offering more personal training sessions if you're already a fitness pro.
Side hustles.
Side hustles, exactly. Or securing short-term consulting gigs. Really anything that can show an upward trend in your income and demonstrate to lenders that, hey, your financial situation is improving.
The white paper also offers this really encouraging message, too,
Right.
reminding listeners that not qualifying initially, well, it isn't a permanent barrier.
Not at all.
It suggests using that time to work on your finances, improve your profile, with the possibility of reapplying in, maybe 60 to 90 days.
That's a key takeaway, I think. It's about viewing a temporary no as an opportunity to strengthen your application for the future. Don't get discouraged.
Good advice. So we've talked about the nuts and bolts of getting a term loan. Now, let's zoom out a bit and look at the bigger picture. Section 6 of the white paper discusses the strategic impact of having access to capital. What are some of the broader advantages Jim Thomas highlights for gym owners here?
What's really insightful here is the shift in mindset it allows. From simply, managing your business day to day to actively growing it. Having readily available funding empowers gym owners to be proactive.
Proactive how?
Instead of just reacting to challenges as they pop up,
Yeah.
you can strategically invest in growth initiatives, in expansion. You're on offense, not defense.
That proactive approach seems absolutely crucial for staying ahead in such a competitive market. What's another key strategic advantage he mentions?
Jim Thomas emphasizes the ability to seize market share. So when competitors maybe face difficulties or they miss key opportunities, having access to capital allows you to move quickly and capitalize on their vulnerabilities.
Ah, interesting.
Whether that's, acquiring their client base or expanding into their territory while they're struggling.
And the final strategic benefit discussed is building your business with confidence. How does having access to capital contribute to that feeling?
Well, when you have the financial resources you need, you can just make bolder, more confident decisions about your business, right?
Sure. Less worry.
Less worry. This includes making strategic hires, getting the best people, investing in enhancing the member experience, maybe with new equipment or better facilities, and implementing more ambitious, more effective marketing strategies. It's really about building a strong, sustainable foundation for long-term success.
The white paper also includes a pretty stark reminder, though, pointing out that many promising gym businesses, they actually fail simply because they lack the necessary capital to sustain their vision.
Yeah, that's sobering.
It really underscores the importance of, well, having this conversation about funding.
Absolutely. A great business plan without the financial backing.
Well, it's like a car without fuel, isn't it? It's just not going to get you to your destination.
So to kind of bring it all together, it really sounds like this term loan program, as outlined by Jim Thomas,
Mhm.
could be a real catalyst for so many of you listening. If you're aiming to open your first gym or expand your existing operation, acquire another location, maybe upgrade your facilities or introduce new services.
It truly offers a pretty compelling combination, I think. Rapid funding, flexible repayment options, relatively accessible qualification requirements, and that ability to use the funds for such a wide range of essential business needs. And for those of you listening who are interested in exploring this further, the white paper provides some really clear next steps. The first one is apply now for same-day pre-qualification.
Yeah, getting that initial assessment is a quick, straightforward way to just see if this could be a viable path forward for your specific business.
You can also reach out directly to Jim Thomas. His number is 214-629-7223, or you can email him at jthomas@fmconsulting.net.
He's listed as a direct resource, so presumably open to specific questions about the program.
And finally, you can schedule a free funding consultation by visiting their website. That's www.fmconsulting.net.
Right, and that free consultation, that could provide some really invaluable, personalized guidance tailored just to your situation.
So as Jim Thomas concludes in his white paper, really don't let a lack of capital keep your gym dreams just sitting on hold. The right funding can truly be the turning point, the thing that separates a gym that merely survives from a brand that truly thrives. Take decisive action on your vision, explore these funding options, and, start building the fitness business you've always imagined.
So thinking about everything we've covered, what's the one key takeaway you think will really resonate with our listeners?
Good question. For me, I think it's the idea that securing capital isn't just about, having money in the bank. It's really about gaining the power to act strategically, to seize those crucial opportunities when they arise, and to ultimately build the successful, impactful business that you're truly capable of creating. It's really about turning that passion for fitness into a tangible, thriving reality.